CNBC TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, let's get the next corporate conversation going. Power Finance Corporation is the stock on our radar. Remember, the stock has seen a 215% up move in the year so far. As far as the business is concerned, in the second quarter, disbursements increased by 91% on a YY basis and 44% on a sequential basis. To discuss the business, the outlook, trends, and more, we are joined by Ms. Parminder Chopra, who is the Chairman and MD, as well as Director of Finance of Power Finance Corporation, to take some questions. Ma'am, thank you so much for joining us today on a special day. And the stock has done really well, but there have been a lot of opportunities that companies have been talking about as well. So give us a sense of what is the opportunity that you're seeing in the renewable sector specifically. We spoke to REC yesterday. They said that the CERC-led capacity addition would require 30 lakh crore of funding. How much of that would be a pool for PFC going ahead?
Thank you very much. And first of all, heartiest congratulations on the 25th anniversary.
Thank you so much.
Yes, you said that there is a 30 lakh crore of total capex expected in the power sector in the next few years. Until now, we have been funding approximately 25% of the total capacity addition and in the power sector. And we expect that this momentum is going to go forward, and we will continue to support around 20 to 25% of the total capex addition in the power sector.
Ms. Chopra, good afternoon. Thank you so much for joining us on a very special day. My next question is in two parts, actually. I'd like to first ask you about how is the state of the discoms, how is the health of the state discoms currently? Are they making repayments on time? And part two of my question is, what is your exposure to these state electricity boards, and whether there are any delayed payments that you're facing? And if so, what is the quantum of the same?
See, state discoms, everybody knows that it is in the past that state discoms have always been under stress. But thanks to the two reform major schemes which have been introduced in the recent past by central government, one is a late payment surcharge scheme and the other one is the RDSS scheme, which has helped to reform the sector on overall basis. Late payment surcharge scheme has infused the liquidity across the power sector value chain, which includes the transmission GenCos, and also had reduced the burden on the state discoms towards the late payment surcharge. Apart from that, there is a new scheme which has been introduced by central government, that is the RDSS, where PFC and REC are the nodal agencies. Total outlay of the scheme is 3,03,000 crore. And the expectation is to reduce AT&C losses after the successful implementation of the scheme to 12 to 15%. And if we see for the last 2 years, there has been constantly major reduction in the AT&C losses. It is also expected that at the end of the scheme by 25-26, there will be a zero gap between the cost and the supply. So that is going to give a financial stability to the discoms, and their overall viability will improve. Your second part of the question, that there have been certain delays for the payment from the discoms earlier, but now we are seeing that all the discoms are paying regularly and in a timely manner. On the overall state sector book, which includes generation, transmission, and distribution, there has never been any default. So as on date, the total book consists, PFC book has 83% exposure to the state sector. So we have not experienced any default on the state sector book till now.
Okay, all right. So 83% of the book comes in from the state sector. So in that case, Mr. Chopra, is there any outlook on change in the loan mix? We are seeing different ways or segments of power sector coming up as well. How do you look at that going forward, the loan mix that is?
See, right now, if you see PFC book, so if I talk of the disbursements during the first half of the current financial year, the majorly disbursements are towards the distribution sector and the renewable. Distribution sector, as of now, most of the states have they are under the state sector only. And in case of renewable, it is primarily, you can say 95 to 98% is towards the private sector. So slowly, the mix is changing. It's more towards private sector growing and lesser towards state sector, because now no more new generation projects are being conceived by the state where major disbursements were going on earlier. But it still take time. Maybe in the next few years, you will see the actual change in the mix.
It'll take the next few years to see the change in the mix. But Ms. Chopra, one final question from my end. What is your outlook on the cost of funds? Have they peaked? And if I may ask, what is the outlook on the margins as well? Have they bottomed out?
The cost of fund, if as on 30th September, PFC has a cost of fund of 7.41%. There has been a view that longer for higher. So we are expecting the rates to remain on a higher side for a few some more time. So definitely that puts pressure on the spreads as well as on the margin. But what has happened in case of PFC, that we have most of our borrowing at a fixed rate. So the reflection on the cost is gradual in case of PFC by any change in the market scenario, be it the increasing interest rate scenario or a decreasing interest rate scenario. So the transition is a bit slow on the overall book of PFC. So once the cost is increasing, we are increasing our interest rates to the borrowers, and accordingly, the reduction is being passed on when the interest rate scenario is on the lower side.
Okay, we take that point. If you can just give us a number, the NIM number in the first half was 3.37%. Considering the interest rate cycle that we are in, how do you look at this number going forward? And your AUM growth as well has been strong. How do you look at it for FY24 and FY25?
See, NIM, we are expecting that we will be able to maintain between 3 to 3.5%. And on the yield, yes, yields have dropped. Earlier, we used to have more than 10%. Now, if you see on the first half, it was at 9.85%. So earlier, when the interest rate scenario was on the lower side, we have passed on the reduction in the interest rates. But for the last 2 quarters, we have been increasing the interest rate, and accordingly, you will see that pressure on the yield is going to go lesser going forward in the next few quarters.
All right, Ms. Chopra, thank you so much for sparing time and joining us on this very special day. We wish you good luck for the second half of the year. That was the management of PFC. The stock has done really well for itself in 2023. Let's slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. We'll be right back.
CNBC-TV18, embarking on a quarter century of excellence.